Let's look at all 17 companies in the industry REIT industrial. I already filled in CapEx, debt to equity ratio, dividend, look at global net lease, almost 14%, free cash flow, market cap, price to book, PE, price to free cash flow, price to sales, revenue, and their 5-year annual revenue growth rate. Together, we're going to fill in these columns. The goal is identifying what's undervalued, what's a good buy. Vici is the biggest company by far in the industry, 34 billion market cap. They have the most revenue and the most growth, which is really rare. Usually the biggest company doesn't have the most growth because as your revenue gets higher, it's harder to grow at 20% clips. When your revenue is 700 million, it's a lot easier to grow 20% than 3.7 billion. So let's take the first company, Vici. Let's see how they performed the past year and their current stock price. I'm going to use Simply Wall Street. This is Vici. They're up 17.4% in the past year. Stock price 32.10. 17.4%, 32.10. And I'm going to always highlight in yellow which company is doing the best in this column, and this column. As we fill in these cells, I'll get more information and then we'll find out who truly is the best company in the past year and the most undervalued. Now let's see what Simply Wall Street's valuation is. 71.71, 55% undervalued. So let's put 71.71, and this is a formula, so it's 55%. And the reason Simply Wall Street tends to have really high valuations is because they usually use a low WACC. 6.4% is the WACC they use in their DCF model, which is really low. The lower the WACC, the higher the valuation. They also forecast 10 years of free cash flow in their DCF. So this column is the actual cash flows they project in these years. This column is the present value. So the present value of all 10 years is 22.5 billion. They do a terminal value, which is 98 billion. They discount the terminal value, so it's 53 billion. The sum of the terminal value and the next 10 years, which is about 75 billion, is the value of the company. So they take the 75 billion divided by shares outstanding, which is a little over 1 billion. 75 billion over 1 billion gives you your 71.71. So 23 analysts priced this stock at 35.86. They say it's 11% undervalued. So let's go back to the spreadsheet and put 35.86. And like I said, there's 23 analysts pricing this stock. So I'll put 23 in here. Let's look at the insider trading activity. There's one buy and one sell. You can see the total shares and the price they bought or sold at. They also provide the name of the person or company. Sold is 12,500, bought is 10,000. Let's put that into the spreadsheet, 12,500, 10,000. Now the next REIT is WP Carry. So we'll type in WPC here, get WP Carry. It's up 7.8% in the past year. Price is 57.28. 7.8, 57.28. So Vici is still leading this column. How well the stock has done in the past year. Simply Wall Street tends to be undervalued for most stocks. Sometimes it's extremely undervalued, 135.69. So this is the most undervalued. Let's see what the analysts say. 11 analysts priced it at 61.73. 61.73, 11 analysts. So Vici is still in the lead in this category. They're at 12%. Let's see the insider trading, 2 buys, 2 sells. So 700 and 5,500. Let's put that in a spreadsheet. 700 and 5,500. The next company is EPRT, Essential Properties. So EPRT. The reason they're called industrial REITs is because they manage industrial properties. So their tenants may be manufacturing companies or logistics centers, just to give you an example. Retail REITs manage retail properties, like maybe a strip mall or one big store, like one big Costco. This is up a lot, 54.5% in the past year, 32.60. 54.5, 32.60. So this is the new leader, 55%. It's rounded. Let's see what Simply Wall Street values the company. It's always really undervalued, 82.50. Now let's see what the analysts project. I like to have a lot of analyst predictions. If it's 1 or 2, it's not as reliable. 16 is a lot. 35.08. 35.08 and 16. So now EPRT is in the lead. They're 60% undervalued. Let's get the insider activity. There are 2 sells, no buys. So it's about 41,000. I usually round it. Now, Broadstone Net Lease, BNL, 29.1%, 1779. And if you want to learn more about the company, you can just read the overview right here. This is not the best overview. Maybe if you click about the company, they'll give a little more info. Let's see Simply Wall Street's valuation, $34.92. We'll put down the spreadsheet, $34.92. 49% undervalued. 1943, 7 analysts. This has the least analysts looking at the stock. There's 1 sell, 4 buys, 6,300, 29,000. Okay, we got that in there. Now let's look at the next company, Empire State, ESRT, 35.9% up in the past year, 1090. Let's see what Simply Wall Street says, 1426. 5 analysts priced this stock at 1092, pretty much where they're trading at, 1092. No insider buys or sells in the past year. It's possible there are insider buys or sells. It's just Simply Wall Street didn't record it. But I'm just going to put 00. Assume Simply Wall Street is right. Safe hold. The good thing about REITs is you get a nice dividend. They usually pay a pretty high dividend, 3, 4, 5, 6%. Up 52.2%, 2301. So even if you're flat on a stock, with the dividend, you can be doing pretty well. Simply Wall Street's valuation is 1821. That is rare. It's overvalued. The analysts think it's undervalued. 13 of them, 2908. Lucky number 13. There's been 2 insider sells, 20,000 shares. We'll put that in there. Next is American Assets Trust, AAT, 55.3%, 2750. So these are tied now, both up 55%. Let's look at the valuation. 2666, another overvalued stock. Sometimes I feel like doing the opposite, like George did on Seinfeld. You'll do better in the market. Sometimes when you follow what you think makes sense, doesn't work out. Oftentimes that happens. 2 analysts at 2450. Simply Wall Street and the analysts think it's overvalued. This 26% is number 1. Let me change that. No insider activity. Next is GNL Global Net Lease, paying a big dividend, 5.5%, 804. 5.5, 804. Simply Wall Street's valuation is 1615, 50%. The leader is 60%, EPRT, Essential Properties. Let's look at the analyst price. 5 analysts at 990. Let's look at the dividend, see how long they've been paying such a high dividend. In January 2024, the yield was 17%. Now it's at 13%. But it's really because the stock price came down. That's why the yield went up so high. Because if a company was paying like a 10% dividend, they would not raise their dividend. Even if they were doing really well financially, that's a big dividend. But when the stock price goes down, the yield goes up. I could show you. Here are their quarterly dividend payments. Actually, they used to pay them monthly. They started paying quarterly in 2019. So they've actually been lowering their dividend. It was 53 cents per quarter in 2020. Then they changed it to 40 cents at the end of 2020, 40 cents up through 2023. They dropped it to 35 cents in 2024. In the second and third quarter of 2024, 27.5 cents. So they've actually been lowering their dividend. Its stock price came down so much. I'll show you what I mean. Here's the stock price since 2020. Like most stocks, it took that COVID dip down to $9, and then it ran back up to almost 20. As you can see in the past 3.5 years, it just keeps coming down. And that's why the yield is going up, is so high. Look at all this insider activity. It looks like it's all by Bellevue Capital. I believe Bellevue is a private equity firm in Rhode Island. And they did lots of selling, not just buying. So they sold, it looks like about 3 million shares. They bought 100,000. Let's update the spreadsheet. 3 million. Let's look at good, Gladstone. I wonder if the stock is doing good, which is not proper English. I should have said if the stock is doing well, but the ticker is good, not well. 37% up in the past year, $15.95. Now let's see the valuation, $21.25. 25% undervalued, 24.9%. Let's see what the analysts say about this stock, if they think it's over or undervalued. Overvalued, 4 analysts, $15.63. $15.63, 4. So they say it's 2% overvalued. Only one insider buy, 650 shares. They paid $14.61. 650. Let's look at Armada Hoffler Properties. Up 11.2% in the past year. Look at this, 11.2. Well, 11.02, but it's pretty close, right? 11.2, 11.02. This is a vertically integrated, self-managed REIT with 4 decades of experience developing, building, acquiring, and managing high-quality retail, office, and multifamily properties. It doesn't sound industrial to me. 1583 is simply Wall Street's valuation. 1583, 30% undervalued. 1150, 5 analysts. They say it's undervalued. 1150, 4% undervalued, 5 analysts. You see this chart, the blue line right here is the actual stock price. But the purple line is the analyst predictions. So the analysts always said it's undervalued. In September 2023, their target was $13.50 when it was $10. 31% undervalued. In May 2024, $11.88, they said it's 5% undervalued by 4 analysts. Lots of insider buying, only one sell, 40,000 shares. So 40,000 plus, what is this, 5, 7, 2, so 14, 325 maybe, 325,000, 40, 325, 40, 325, 1, 2, 3. This has the most insider buys. Now let's look at OLP, One Liberty. Okay, Simply Wall Street says it went up 48.4% in the past year. Its last price, $26.82. 48.4, 26.82. 48.4, 26.82. Let's see what Simply Wall Street values a stock. 46.59, 42% undervalued. 46.59. So that's pretty undervalued. Not 60, but it's pretty good. 2 analysts at 26.75. Pretty much where it's trading at, 26.75. Lots of insider sells, no buys. 3 plus 36 is 39, plus 7 is 46. So about 47,000 shares. 47,000. CTO Realty Growth, up 23.6%, 1956. 23.6, 1956. It looks like everything went up in the past year. GNL only 6%, WPC only 8%. Let's go back to Simply Wall Street and look at the valuation. 47.78, 59%. 47.78. 47.78, almost the most undervalued. 59%, the most is 60%. Let's see what the analysts say about this stock. And let's see how many analysts give their opinion. 6 analysts, 21.75. 21.75, 6. 2 insider sells, a total of 6,000 shares by the same person, about 2 weeks apart. 6,000. Now let's go to Next Point Diversified, NXDT. Negative 26.7%, 542. The first negative. Let's look at the valuation. 279. Let's see what the analysts say about this stock. I wonder if they think it's overvalued. Well, there's no analyst looking at the stock. So we'll put an NA and 0. Why are not any analysts looking at the stock? Maybe something's wrong with the company. That's why it's going down. Let's see how the insiders feel. Do they think it's over or undervalued? They're buying it up like, wow. Buy, lots of only buys. 300,000 shares. James Dondero buys a lot. He's probably the CEO. He is the founder and principal of Next Point. So he's the founder, not CEO. So 300,000 shares. Not as much as Armada Hoffler, but Armada had 40,000 shares sold. They have no shares sold. So the net amount is highest with Next Point. Modiv, MDV. It's like the DMV, but switching the letters around to MDV. 16.8 up in the past year, 1776. 16.8, 1776. Let's see what Simply Wall Street values this stock. $33.69, 47%. And now let's see what the analysts predict. I wonder if they think it's overvalued or undervalued. $17.75, 4 analysts. $17.75, 4 analysts. There's some selling and a lot of buying with this stock. So 131,000. The people who bought the stock didn't buy that many shares relative to the sells. So about 8,000 sold. 131 and 8. 131, 1, 2, 3. MDRR. These are the microcap companies. 14.4% up in the past year. Last price $12.01. Let's see what Simply Wall Street, 44 cents. Wow, 44 cents. The WACC is pretty low, 7.5%. They don't predict their future free cash flows. The company must be in a lot of trouble if they can't get their future free cash flows. They use the dividend discount model to calculate the stock price, which is the total dividends paid in a year, 16 cents, over the WACC minus the growth rate. The growth rate is negative, so this just doesn't make any sense. Simply Wall Street shouldn't be using this formula. Because if the growth is negative, the stock price theoretically is zero. Let's just put that on a spreadsheet, 44 cents. It's 2,600% overvalued, which matches their calculation. I have a feeling 0 analysts are going to be looking at this. 0 analysts. So we'll put NA. This stock looks pretty bad. It looks like they're headed towards bankruptcy based off of what I'm looking at right now. Negative growth, no analyst looking at it. The stock is worth 44 cents. Yield of 18% in 2019. Now it's down to 1.4%. But look at these bars on the bottom. They were paying $2.80 for the dividend, then $2.80, $2.80, and then in 2021, 32 cents. Now they're paying 2 cents, 4 cents, 5 cents, and October 15th, 6 cents. Maybe it's a buy. They're raising the dividend. Only insider buys, no sells. That should give you a little more confidence. So 31 plus 43 is 74, plus 28, 102, plus 5 is 107. Let's call it 106. 106. Let's look at square foot. That's a great ticker. Presidio Property Trust, SQFT. They should get the prize for the best ticker in this industry. Up 30.5%, 68 cents. 30.5. This could be a nice bottom feeder stock. Let's see the valuation. 50 cents. I have a feeling no analyst will be looking at this stock. Yep, no analysts. Lots of insider buying, no selling. 10 plus 22 is 32, plus 101 is 133. So 133 plus 500 is 633, minus 10 is 623. That's how you add 490. You add 500 minus 10. It's just one way to add. Like if you were asked what's 99 plus 99 plus 99, just do 100 plus 100 plus 100, 300. 300 minus 3, 297. Don't try to do 99 plus 99, 198. And 198 plus 99 is, then you get tripped up. Just do the easy route. So 0 and 623, the most buying activity. And last is GIPR, Generation Income Properties. GIPR. Negative 48.8%, $1.98. Now let's look at the valuation. 608, 67% undervalued. 608. We have a new winner. So this stock is the most undervalued according to Simply Wall Street. No analysts looking at the stock. 2 insider buys, no sells, 2,500 shares. So in the past year, the average company in this industry went up 21%, median 24%. The best is EPRT, which is third in market cap, 5.6 billion, tied with American Assets, 1.7 billion market cap. So a decent size. Kind of on a smaller side, but not that small. I don't like to go under 1 billion market cap. I think it's a little too risky. And I think most people shouldn't invest in companies below 10 billion. You have to do a little more due diligence on those companies. They're pretty risky. The average company is 44% undervalued according to Simply Wall Street. The median is 16%. The best is GIPR, the smallest company, 7 million market cap. According to the analysts, the average stock is 7% undervalued. The median is 8%. The best is Safehold at 26%. It looks like a lot of these smaller caps they don't even look at. And if you want to just go with the insiders, Armada, lots of buying. Also, Next Point. And the most is Square Foot, Presidio. Lots of insider buying. So it's interesting to see a different view on things. If you want to become a pro at analyzing financial statements like the income statement, statement of cash flows, and balance sheet, click on the video in the top right corner. Thanks for watching.